let's talk about how there is another section of the economy which seems to be moving ahead. The Nomura India Business Resumption Index has been tracking what is happening in the economy for some time now, and 100 is the base with which they have started as activity pre-pandemic. Now, for the week ending August 15th, for the first time, that index crossed 100 at 101.2. What this essentially means is that activity, at least as per this calculation, seems to have come back to pre-pandemic levels. To speak more on this, I'm joined now by Aurodeep Nandi, who's Vice President, Nomura India Economist. Welcome so much, Aurodeep. Great to have you back on the show. Tell us what we can read into the numbers coming out from the Business Resumption Index for the week ending August 15th.
Good evening, Tamanna. So essentially, the Business Resumption Index, we look at ultra-high frequency data that comes out daily or weekly, things like a variety of mobility indices, labor participation rate, power demand, and we essentially put all of this together and sort of see what ultra-high frequency data tells us as a forward-looking indicator of what the economy is going to, the economic activity is going to be looking like. And the two interesting things that this data has found, as you've said, is the first time it's reached and breached pre-pandemic levels, right? And what's really interesting is if you just sort of take a step back and you look at how this index has moved during the first wave, it took around 10 months for this index to go from the bottom to close to 100, which is the pre-pandemic level. This time it took less than 3 months. And I think that sort of supports our hypothesis, which we've been saying for quite some time, which is that, yes, the second wave is a humanitarian crisis, but the economic impact is going to be far more muted than it was during the first wave. Consequently, our GDP growth projection for Q2, which is April to June for the calendar year, we have an out of consensus expectation of 29.4% year on year. There's a big amount of base effect here. So sequentially, we are expecting 4.3% Q on Q seasonally adjusted fall. This is higher than consensus. It's higher than what RBI is saying. Now, the second thing that sort of comes out is we've been seeing this index. It's rapidly picked up in June and then it's kind of plateaued in July. And that was a matter of concern for us. We see this in a lot of the first flush of July indicators that we see, that after it recovered in June, consumption, investments have somehow plateaued a little bit in July. But look, the NIBRI is essentially saying that in August, it's again discovered its mojo. So we are seeing some of this very ultra high frequency data return back into momentum. The question really is, Tamanna, the question which you asked at the very beginning of this program, which is how sustainable this is. And look, I mean, there are risks to the whole growth story, right? You mentioned about malls being opened and then shut in Mumbai. We are in a situation where the third wave could happen, right? And if that happens, then you could have lockdowns being imposed, and you could again get a mobility compromised in coming months. But notwithstanding that, we still remain broadly optimistic on growth.
Aurodeep, there are different aspects, of course, to the recovery story. And one of them, as you rightly said, is mobility. Can you go out and spend if you want to? Can businesses open and offer products and services without hindrance if they want to? The other is income abilities and consumption levels. Where do you see that coming in? Do you see that as a challenge? Because indications are still pointing to repressed consumption patterns, uncertainty over there. Income levels have fallen over the last 2 years. And do you think that will be a challenge?
So, Tamanna, I think there are two sides to this, right? One is that I don't think that mobility and consumption are necessarily different things, right? People consume when they move around. And mobility will happen only when you get a vaccine pivot of sorts kick in, right? In fact, today I think we had a record amount of vaccine doses per day, 8.8 million. But overall, August, while the doses per day has been higher than July, so it's around trending around 5 million doses per day versus 3.9 million in July. It's yet got to reach a daily run rate of over 7 million doses. Now, when that happens, Tamanna, I think what's going to happen is that a lot of this pent up consumption that is there, demand, that's going to come out more. People are going to move around more. People are going to buy stuff more. The second aspect is, you're absolutely right about the lost incomes, but the other thing that India is facing is a K-shaped recovery. Right. And what this essentially means is that there's a small part of the population who have strong balance sheets, who've been doing well, and they have done well in this pandemic. And then there's the bottom half of the pyramid, the bottom leg of the K, that's really suffered. And one of the things that's happened in the course of both, the first and the second wave is that this K has become capitalized and more italicized, right? So a lot of the consumption that you see now, right, of cars, of maybe two-wheelers, of maybe other luxury goods, a lot of this consumption would be related to the part of the populace where the demand has been lesser compromised, not that of the informal sector. And I think that is a worry over the medium term. So in the short term, I think consumption will still hold its ground. Over the medium term, definitely there is going to be a drag that's going to come from people from the informal sector, from the bottom half of the K. But again, it's interesting because people's consumption patterns would change. A part of consumption is inelastic, so you will demand certain goods and services despite your income, so be it consumer non-durables, etc. So it's going to be a mix of a lot of factors. But I think currently, given that we've got good monsoons coming in, given that we have a good amount of fiscal stimulus in the system, we've got pent-up demand coming in. There's a festive season that's going to come up soon. The government has been putting into arrears its dearness allowance for at least 1.5 years. So that should kick in at the end of the year. So there is a lot of consumption boosters still in the system, which will eventually show up in the data over the coming quarters.
Absolutely. Now, what about the big I in the middle of this, namely being inflation? The RBI put out its report today where it said that they expect inflation to follow the patterns it has predicted. They, of course, upped their target to 5.7% and seem to reiterate that, they will be backing growth and they need to right now. Is inflation of concern to you, and how do you think policy will be handling this?
Tamanna, it's not just a big eye, it's a scary eye, right? And it's sort of the elephant in the room that's constantly gaining weight. And look, I mean, there are a number of reasons why we are worried about inflation, right? First is that you've got a lot of core inflation remains sticky. So this is sort of the you take out food, you take out fuel, and what's sort of the core part of the inflation index, that's quite sticky. And that's primarily because we've got higher commodity prices that are kicking in. Margins have fallen. So essentially, once, the economy reopens, you'll have retailers who would want to pass on these higher costs to end consumers. But higher fuel prices, petrol, diesel prices, pretty high. And we've got commodity prices globally, which are elevated. And so, I guess what RBI is arguing is that, look, hey, all of these are supply side pressures, and we shouldn't be overreacting to this at this point because growth is still nascent. And I do sympathize with that with that notion because it's really tough being a central banker in an emerging market at this point. However, the real worry is that your inflation expectations are at multi-year highs, right? We've not seen these levels of inflation expectation maybe in the past 4-5 years, if not more. And the worry is that once that you could argue all of these are supply side pressures, but once inflation gets entrenched in the system, once the policy credibility starts eroding of a central bank, then the central bank would have to hike rates even further in order to make up for that credibility, right? And one of the things that would happen is, look, if we have a third wave, right, and suppose if we have more lockdowns, then there is a supply side shock. This is going to be the third supply side lockdown shock on inflation in 2 years. And suppose if the third wave doesn't happen, as we spoke about a few minutes back, consumption starts picking up. Then you've got demand side pressures coming in. So it's not just that the
Yeah.
cost of making a pressure cooker increases, there's going to be demand for more pressure cookers, so the price of that will also increase. And at that point, you essentially have to take a call that, hey, should I still be supporting growth at a time when my mandate is targeting inflation, and inflation is indeed building up? So what we believe is that for now it's still on hold, but the RBI is likely to talk about policy normalization. In fact, this monetary policy, Tamanna, we already had one MPC member dissent the accommodative stance. We've already have this
Absolutely.
VRRR, which
Right.
takes out easy liquidity. So we are expecting a 40 basis points reverse repo rate hike by the end of the year, which normalizes the policy corridor. Before that, the RBI will also be sucking out some of this excess liquidity in the system. And consequently, in fact, purely because of this inflation scenario, we have 75 basis points of hikes next year. So, I mean, definitely inflation is an important eye. It's getting more and more prominent, and it is likely to drive the policy pivot, not just in India, but also a number of other emerging markets.
Yeah, absolutely. Interesting times to watch. Thank you so much, Aurodeep, for joining us and taking us through those many important aspects. Big takeaway there that business activity has resumed as per this index to pre-pandemic levels. Q3 is looking good, barring, of course, the return of a COVID third wave, which hopefully, right now we're hoping that even if it does come, will be a fairly muted one. We have to keep watching those vaccination rates. So we've done a great job yesterday with over 88 lakh vaccinations in one day, but we need to keep that up consistently. Thank you so much for speaking with us.